All right, everyone, welcome back for the episode of Carnivore Trades. Today is Wednesday, June 7, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So, a little bit of a downdraft here, mainly out of technology. Triple Qs here, down almost 2% at one point. They're down about 1 3/4 right now. And a lot of money flow coming out of specifically, big tech, but a lot of it coming out of like cloud software, particularly the IGV here, down over 3% on the day. And that's basically back testing that old trend line right there. So that pivot low back from January 2022, back below the 100 week moving average here. And this is why I keep talking about like this rally's long in the tooth. Don't chase, right? I mean, I always preach don't chase. And there's a lot of FOMO out there, and this is what happens, when that rug gets pulled. So IGV here, just one example, wiping out 1, 2, 3, 4 days worth of trading. What really, actually, if you count those, this is where we closed on the 26th. Really 6 days of trading in one day. Microsoft down pretty big here. Take a look at some of these other cloud names. Cloudflare down over 8.5%. ServiceNow down 5. Even Oracle, that hit an all-time high yesterday. Down 2% on the day. So again, Adobe down three and a third there. So again, just be careful. Don't chase these names. Apple, we all know, had that big reversal, and that's had a little bit of follow through here. Nvidia down almost 3%. AMD down 5%. Tesla bucking the trend. That is up, but I mean, this looks very top heavy here. Take a look at the resistance zone that this is coming into, and I think you can see it better if we just flip back to a daily. But take a look at that trend line there. Beautiful, beautiful hit there. Converging with this top side trend line, and you can also take a fib from the previous pivot and boom, right into a 618. So a lot of resistance up here for Tesla. And this is why you don't trade. It's 60, we're up in the last 6.5 weeks, it's up 50%. That's chasing. I see these accounts out there talking, we're buying calls on Tesla. You got to not chase here, and that's, it's up on the day here, but it is very top heavy. And you see mainly with technology, some of these big tech names, Meta coming under pressure as well, down 3%. So it is a nice sell. And on the Qs, good volume, right? So definitely some good volume behind it. But you do have strength in lots of other sectors here, mainly the Russell, right? So that's up 2% on the day. So kind of just trading off there with the NASDAQ. Spiders are down about 1/3%. So kind of a split in the middle, and then the Dow up about 1/3%. So kind of a stocks essentially mixed right now. And really the Dow and the Russell have been kind of trading a little bit in tandem here lately. I still think the Russell's got to go up to 190, 192, and that'll take you right to that weekly red bar. Just remember that this is still a bear pattern on the monthly. You're still below that 20-month moving average. You still could wick through that a little bit there. But I think it wants to go up to that 190, 191 area. It's still a bear pattern there. But nice move to the outside. And you're seeing some money rotation. There's nothing wrong with that. If volume comes back into this market, specifically on the spiders, and you break this low with volume, then it's a different story. Then we can talk about, all right, is there a top end? But right now, markets are hanging in there okay. A lot of the reason the Russell is up, honestly, in my opinion, is just the KRE here. So regional banks still getting a bid. Still coming into a lot of resistance, though, 44 to 45. There's a lot up here. So this may have to stall out a little bit. To be fair, industrials are up nicely as well, which does have a good percentage in the RUT. And I think mats are up 1.2 as well. So, it's helping out a little bit here. Transports are having a nice day, so finally seeing follow through. So that is a good sign here. To me, you still have to be leading the market, and it's lagging. But, right now there's no real problems. So 14.5 should be an area that it wants to go test here in the near term. But overall, really, the Russell 2000 finally kind of taking the mantle up a little bit here. As tech does see some selling. If we are up, I remember we have the FOMC next week. We've got CPI. The TGA refill starts next week as well. And then we have June OPEX in that same week. So lots of stuff going on here. I think if we're up still into that, you got to think that there's going to be some type of counter trend move here. The Fed rate or the Fed pause is completely priced in. So, I mean, that's totally expected. The Fed's not in the business of surprising the market either. So that's something to consider here as we get to the closing bell there. And there it is. So spiders basically, again, just, a third of a percent or so. Q's down 1.7, Dow up a third, and the Russell up about 2% there. So again, a split day across the board, but you did have some key sectors, and this is what the bulls need to see a lot more of. Is that kind of sector rotation. But to me, you really need to see the transports leading and not making lower highs since February. Also, I know there's lots of talk about it's a new bull market, this, that, and the other thing, but for reasons I've said many times here, it'll be the first bull market to start with an inverted yield curve, to be the first bull market to start before the Fed starts cutting. So there's just lots of problems that I see here. And again, this back half of the year, it does look like we're going into a recession. The Fed says it's mild, so that means it's probably going to be severe. So just some things to consider here. By the way, yields today, let's take a look at the 2-year. As the dollar index is right here, getting a bid as well. We got a bid here, and up to back above 4.5 again. Well, Bank of Canada today came out with kind of a surprise rate hike, so that kind of priced in a little bit more hawkishness here. Again, this is kind of a big elephant here in the room. It's not necessarily a problem yet, but if it gets back above 5%, it becomes a major problem. So just more headwinds here. To me, might say, well, why is the market going up? Honestly, I just think it's a big short squeeze. That's really all it seems like to me, because too many people saw the same thing, saw the writing on the wall, and that's what happens. You get positioning too bearish, and these squeezes happen. That's really what I think it is. Additionally, it has to do with the liquidity that the Fed definitely put in the market behind closed doors in March. I mean, we were set to go limit down, and it just magically reversed there. So it's not a coincidence, and it's also not a coincidence that we bottomed in January, right when Yellen started dumping out that TGA account. So we'll see how the market looks when liquidity is being pulled out. That's really that simple. But for right now, again, S&P stalled out basically at the 618. We've talked about that previously. And then, of course, there's a double top if you do get up there. But you just got to watch this island here. You take out this low, you probably get down. I mean, you're going to test 420 at the minimum and a 20 moving average. If you break that, then we'll talk about more downside. But until we get a high volume reversal, there's no real reason to say that this is anything more than a pullback at this current time. Triple Qs here, again, we talked about that, down 1.7. I think that wants the 20 moving average here. So right in that 340 area, maybe a pierce of the 20 MA. There's also this trend line. We can extend that out. So right there. And then there's, of course, this one as well. It's in, a little bit lower, obviously, but right in this vicinity, you'll probably get a bounce. The question is, does it put in the lower high? So, and we are going into, so tomorrow's Thursday. Let's say we're down again tomorrow, and then maybe we bounce off the 20 Friday. Do we go into the FOMC and we bid off of the pause news, and then do we make a lower high? Something to watch there. Again, there's still that 360 handle with that gap right up there. So that would be a possibility to the upside. But I mean, come on, it's now only up 6% since the 24th, whereas it was up 8% at 9:30 today. Really stretched, right? Just the rubber band is like this. So again, that's why we stress don't chase. And again, we'll see what this market gives us. We did have an uptick in volume there, finishing with 65 million shares. On the Qs, the Russell, again, watch from 190 to 192. Dow here, that's holding up. Again, we'll still look at 340 and then maybe 343 if it really gets a bid. That's really all I got for the Dow right now. Semiconductors came in down just 0.5%. Intel was up, so that did help offset some of the, AMD right back down, got rid of all of yesterday's gains. So did offset some of that. NVIDIA down 3% too. Watch this low here. A lot of the time when you have these big gap ups, you'll get a break of that low and it ends up being a bear trap. The question is, does it put in a lower high after that and then continue lower? I mean, I fully expect it to come out and fill this gap. It's just a matter of time. And honestly, I wouldn't be surprised to see NVIDIA at 195 to 200 later this year, if not Q1 next year. But right now, you're holding up, but we had a pretty good outside move down. Little uptick in volume. If we had much higher volume, I'd say that we can make a lot more out of it. But until we see that, it's just doing... it's just backing off essentially. But anyways, IGV, we already mentioned, that took a pretty good hit today, down 3%. That probably does want the 20 moving average as well. And then you have that previous high there, 317. which would coincide with that level. In fact, let's move this right now because we don't even care about that gap anymore. So let's put that right there. So that's going to be your next kind of level there of support on the IGV. If you get through that, then it's probably down to about 305 and then 300. So we'll watch those levels here. I don't even care about this level anymore either. But right in that area on IGV if we do head lower. Transports, again, 14.5. That's what we're looking for there on the daily. Again, we just prefer this to not be making lower highs for this entire bull market run. 2-year, we already talked about. 10-year yield. That was up 2.3% on the TNX. Still just looks like a little pullback here and a higher low right now. So yields starting to creep back up. 30-year up 1 3/4. Again, higher lows equal highs. Let's just draw it in here. Right, so outside of that little outlier candle, everybody should know that this is, you know, an ascending triangle essentially. So that's bullish, right? Everybody expects the Feds to cut. I don't think that's going to happen, as you guys know. Anyways, XHB continuing to power up here, 1.63% on the day. That continues to just be a powerhouse. Again, I think I gave you guys that level right around 77, so that red bar high, that's probably where it wants to go. So XHB continuing to just defy gravity here. Home builders having a really good run here. ITB, same thing, although they did come nicely off the highs. So we went up there and touched 80 and then came back in. Let's look on the weekly here again. Yeah, so kind of, you know, you're right into the meat of this red bar here. So that did pull back a little bit off the highs there. Remember, ITB does have all those Home Depot and, you know, Lowe's, Sherwin-Williams in it. So a little bit of a skew, not as much of a pure play. VNQ green, yay, finally got up to 84, right? So, or, well, close to it. So 83.90 was your high of the day. Basically testing this top here. And, you know, we've noted this as a good POC for the last, really since October, right? And you're into the 100. Maybe this overshoots to the 200. And then we'll talk about 85.50. That's really all I've got penciled in right now. It's still weak. I mean, don't get me wrong. This is still, you could still reject this 20-week moving average. And, you know, this is just all inside bar bear flagging below the trend lines right now until proven otherwise. But, you know, it got a pop today, so we'll respect it. But, yeah, VNQ up almost 2%. XLF up 39 basis points. Still lower highs here until proven otherwise. And I think, you know, again, I mention this every day, but this is just kind of a bear wedge here on the weekly until proven otherwise as well. KRE, obviously up 3 1/3, which we mentioned. Into resistance here at 45. Be careful with it. I would not own it. KBE, same thing, into some resistance, although this is in a little bit better shape, obviously, than the KRE. XBD, powered through 460. So nice move there. Closed above the 100. So that's a sign of strength here. We'll watch 467 to 470. So nice move there, counter trend move for XBD, and get back above the 20-week moving average. I'm very interested to see where this closes the week here, but nice move there for XBD, and that got to our target there and actually overshot it a little bit. Crude here, up 1.18. Nothing's changed. I don't love the pattern. I think it's going lower. It'll be a buying opportunity later this year. There's not much else to say about it. XLE had a nice day, though, up 2.67, so 2 2/3, closing back above the 50 MA. This is a positive here. It's still not, you know, anything to get too excited about until you get, you know, really above this red bar. But bare minimum, you got to get above that 50-week moving average there on a weekly close. But it does, you know, it did shape up a little bit better here today. XOP shaped up better, stalling at the 100. We'll need to see a little bit more out of these. And then OIH tested our 280 level. So we've been talking about that for a while. We got all the way up to 280.33. There's your 200 MA. We'll see how that reacts tomorrow off that. We did, remember, you did have really good volume, right, off that big candle. So there may be some legs to this. We'll continue to watch this moving forward. Nat Gas had a nice day as well. So again, this channel continues to be support. We closed above that little breakdown bar there. So that is a sign of strength here. We'll see if that gets up into that upper trend line there. Another thing too is these Nat Gas plays. You know, this kind of ruined my morning here. I had an open order at 37.48 on EQT this morning, and you know, it never filled. So big move there. Nice pattern here, but I like these kind of Nat Gas plays. They're holding up well. I like kind of some of these bigger patterns on Cheniere, LNG. Not a bad weekly inside bar, so that is kind of a good sign here for Nat Gas, but I'm definitely interested in some of these plays here. I'm really annoyed, though, about that EQT Had an open order, and sometimes it's the market does. Anyways, let's get over here to the DXY, which we mentioned a little bit earlier. Is upticking though, but it was down a lot earlier. And again, nothing wrong with this consolidation pattern. I think this is setting up for a move to 106 to 107. I don't see any issues with the dollar right now. Gold down 1.25 here, as you can imagine, rejecting the 20 MA on the daily. And looking a little softer here on the weekly. You got 2 days. Well, I suppose you could close here on the week and still technically be above the 20 MA, but it's bulls are kind of running out of time here. You went up last week and then you came back down. We went up this week with a lower high and we came back down. So you don't want to lose this on a weekly close. That does put gold into corrective mode, so just be aware of that. Silver failed breakout here of the 20 MA. That backed off as well. Again, I don't like this one until at least 22, but silver here coming in as well. Platinum also right into that little necktie, 50 and 20 MA, and then backing off of that. So that pattern still remains a little on the sloppier side. And then palladium here. Would like to get this below double bottom. I think it might get there here. So we'll watch this one. But yeah, backing off here down 1.7. And then copper here stalling at the 200 moving average. If this consolidates, you can push up to 390. But right now, that's all the upside I have for it at the moment. All right, lastly, over to Bitcoin. So Bitcoin all over the map here again. So yesterday we talked about that impressive reversal, and then it reversed half of that today. I wouldn't do anything with it at the moment. I may have a downside bias depending on the pattern here, but that's a pretty good reversal that we had yesterday. So, if this kind of shapes up and firms up, it can go up to, we'll say 28 to 28.5. But I need to see more. It just, it was down like 5% 2 days ago, and then it was up 5%. It's hard to make much out of that right now. So what you do is you go to your weekly and you basically say the same thing that I've been saying for the last 5 weeks. And that is, if you close above the 20 moving average on the weekly, it's still okay. If you lose it, it's cooked. So that's the way I'm looking at it right now. But yeah, Bitcoin back down and giving back some of those gains. Lots of, lawsuits and stuff like that going on. Coinbase, did get a little bit of a bid here, so recovering some of those losses. MSTR backed off. Riot down 4.31, and then Marathon here down 5. So just a lot of chop here. Again, just use those weekly time frames. They tell you a lot more. Anyways, back to the spiders here. So down 35 basis points. Watch this. If you take this low out on volume, there's a good chance that this is going to go down. And we'll talk about levels if and when that happens. But for right now, if volume is light, they can keep this held up. Remember, Fed blackout period. No data this week. We do have initial jobless claims tomorrow, so that may be a little bit of a market mover, but that's really all it is. And then, of course, CPI, FOMC, all that good stuff next week. So I think that's where the fireworks can happen. Anyways, guys, I'm wrapped up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.